Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. 3 stocks, 3 charts, and 3 trades. Rick Ducat joining us here in studio to take us through the charts, and here to take us through the trades is Dan Deming. Great to have you both with us today. Dan, let's start with a big picture thought on how the market is performing today in the wake of the rate cut decision and also the big earnings we got after the market closed yesterday.
Well, probably not the way that many market participants anticipated, particularly when you look at the bond market and yields continuing to move higher for a second day in a row. And yeah, the selling pressure in the market, I mean, I guess to some degree, not overly surprising given the fact that it does appear that there was some disappointment in the discussions between China and the U.S. overnight as well. So, the market is coming off those all-time highs, giving up a little ground today. But the rotation today, I think, is something certainly that's interesting after we did see quite a shift in the market the last couple of sessions with those big tech names leading us higher. We're seeing that rotation come out of the market a little bit today. So that's something we're keeping a close eye on. And I do want to discuss, the fact that equal weight is something that's a theme of our firm. It has been for years. And we also have an ETF that's an equal weight ETF. So, that's something that your previous guest was discussing. And that's something that we're keeping a close eye on in this market as we move through the fourth quarter.
Yeah, it's certainly important right now. We were just talking with Todd Stone about the importance of staying diversified right now with this AI trade pushing us higher, but we've also seen how it can pull us down very quickly as well. Right. Let's get into the big three, though. Your first pick is Corning. They're coming off of a record quarter, record sales. Is that part of why this is a pick today?
It is. It's breaking out. That's another reason. And it doesn't get the attention it deserves. That's the third reason. So that's why I chose the first 2 stocks, basically, because they just don't get the attention I think they deserve. And looking at Corning, certainly maintaining this strong uptrend and breaking out here after the earnings announcement. And so I think that the fact that it's breaking out, momentum continues to be to the upside. And I'm looking for further upside capture here in this trade example today.
All right, so further upside capture. Right now we're up about 1%, but the last 6 months up more than 100% as far as Corning. Rick, when we look at the chart, you can see, some of this massive uptick in the last 6 months here. What are the technicals telling us?
Yes, you can't really ask for too much of a better chart. And what we have here is a situation where we've seen a sharp rally here that was propelled first by this earnings event that we saw back in July. From there, we have had a very steep rally with a brief period of consolidation right here. This looked like a bull flag type of pattern to me here, where after a sharp rally, we have a brief pullback period of sideways to downward activity here. Traders are perhaps taking some positions off the table or readjusting things. But then what we had was a push back above that resistance ceiling near 87 in this case. So we had lows near 83, highs near 87. We've broken above 87 and established new highs. 91, 93 is the mark to watch. So now if we were to look at some of our other studies here, one other theme that I noticed today with these 3 stocks is that we saw a little bit of bearish divergence on the RSI. You can see here how price was making higher closes. At the same time, RSI was actually trending a bit lower and even steepening more to the downside this time here. However, we were also in the overbought area. We had a bit of a reset now, and now we are on the verge of breaking above this trend line here. So RSI is certainly not a crystal ball that tells you when a downturn is coming. What this is telling us really is that the pace of the gains is slowing down. If you had a bullish outlook, that means that could be the time to perhaps put on a new position before the move comes to the upside then, if that was your outlook here. When we do look at our volume profile study, we can see that this area right here near 86 lines up with our +1 standard deviation channel and our 21-day exponential moving average. So that could as a standout downside area. If we do move to the upside, 99.45 is where our +3 channel comes in. And as Dan said, a stock that doesn't really get the appreciation it perhaps deserves. Look at this 5-year chart, really just very dramatic rise to the upside after a period of relatively range-bound activity, but a standout mover for sure.
And Dan, as we talk about trading this one with everything Rick just broke down, how would you approach that?
Yeah, so today's trade example is buy writing the stock, and it's up $1 from where I was looking at it earlier in the session. But still, again, the opportunity here, I think, is to capture upside momentum. write a call above the market. So I was looking at buying the stock and then selling the January 100 call. You can probably do that for about $4 right here. So it gives you better than 10% return to the upside, and it pushes any tax event into next year should we get above that 100 strike and decide to take that position off if we do get above that 100 strike going into January expiration. But give a capture zone to the upside and also have an exit plan should we trade above 100 going into 2026.
All right, so let's move on to your next one here. And I know you said you don't think that this one and your next one get enough attention. I have to confess, I'm not very familiar with CMI, with Cummins. What brought this to your attention, Dan?
Well, power driven. I mean, basically, they're in that area, the industrial area where they generate, engines and the other things that they're getting to. They're also into batteries, though, and that's where I think that's why the stock continues to show the strength that it's showing, is that they continue to evolve in the battery delivery systems and energy as a whole. So looking at this stock, again, a stock that doesn't get the attention it probably deserves. It's in the industrial complex, but nonetheless, the price action, I think, speaks for itself and continue to maintain its upward momentum. So that's another reason why I chose to pick this stock today.
Yeah, and certainly, it held and paid attention to by institutional investors when I was taking a look at it. More than 50% of the business is held by 22 different shareholders here. So a lot of institutional interest on this one. But Rick, as we look at the technicals for Cummins, a similar chart, maybe not quite as steep, but really a strong move to the upside here as well.
Yes, many similarities, as you say. Look at our light green line near 388. You can see it was a high point once again here, then a bit of a consolidation point. We had our breakout, then it was supportive. And this area right here is a pretty similar type of price activity that I pointed out on our last chart. We had our sharp rally, a little bit of range-bound activity. You could draw perhaps that bull flag type shape there. And then we had the push back above those old highs. So a very common thing people look for in trading. Certainly not going to work every single time, as I so often say here, but this is kind of a similar type of behavior that I just wanted to point out here. So then we had our old ceiling near 407 here. That was roughly where price hit lows. We did make some intraday lows beyond that point, but in terms of closing prices, we stayed right around that general area here. We had a bit of a rising wedge type shape here in blue initially, but it's given way to just a conventional upward trend line here. We broke through to the downside, but now we are making new highs above that previous peak near 440. So when we consider momentum, once again showing a little bit of divergence here, pretty common when a stock is heading into earnings though. So in this case, I don't think I would make too terribly much about that, but here you can see, just to point out the examples here, gradually decreasing RSI even as price continued to make higher closes. A bit of a mismatch between price and momentum, but in this case, you can see here that now that we are breaking above, what you'd want to be looking for would be the crossover above our red trend line and back into that overbought area that is above 70. Finally, when we look at volume profile, the area right here, pretty similar situation to our last chart here. 21-day EMA +1, standard deviation channel, and volume node all come together right around 420 to 425 or so. So that looks like a notable downside area. Our +2 standard deviation channel comes in right around 465. So those would be some shorter term points to consider.
All right, so Dan, with that said, and knowing we're trading sort of right in the center of that range at 448.82 right now, how would you look to trade this one?
Yeah, well, we rallied $6 since I looked at it just earlier today. So again, upside capture. So I was looking at today's trade example is to buy the 440, 460 call spread, but then sell that 410 put below. And Rick pointed out that that's kind of the support level. So selling that put to finance the cost of the call spread, you could do that for about $1 at 442. It's a little more now, but nonetheless, capture upside, reduce the cost of gaining exposure to the stock by selling that put. And if we continue to maintain the upside momentum into December, then capture that range. If we see some weakness, and maybe have the opportunity to get put in the stock at a better level.
All right, so let's move on to this last one. We've got Palo Alto Networks ahead of their earnings. Is that part of the play here?
To some degree, yeah, and also just some momentum once again in this stock, but it is also part of the thought process here, and that's why I'm looking at a defined risk trade example on this example today. But nonetheless, maintaining upside momentum. Now, this is the stock that we hold in the Essential 40 as well, so this stock does get the attention it probably deserves. more so than the other two. But again, maintaining the theme here with momentum being the theme, and we continue to see Palo Alto now moving to new all-time highs as well, heading into the earnings announcement. But today's trade example is a little bit more of a risk defined in the sense that because of the uncertainty coming out of earnings.
Yeah, and certainly just off of those 52-week highs, trading at 221.15, 52-week high 223.61 for Palo Alto. So knowing that, Rick, as we look at the chart, what's it saying?
So this one may, on the surface level, may not look quite as strong as the other ones, but we do have some similar things to discuss here. 207, repeated resistance ceiling that we encountered several times here. Then we had a bit more of fluctuations here before eventually pushing to the upside here. And perhaps this one doesn't look quite as big as some of our other rallies, but a move from 165 to 220 is certainly, nothing to sneeze at here. That's a very strong rally to the upside here. Once again, we had these kind of consolidative phases here, bull pennant type activity, where we have these pullbacks here, perhaps in the midst of one once again here. But what the bulls would be looking for would be for the old highs, 218, to hold on. That's about where we hit our lows. So around 215, 218, that general area. And then for a push back above 223, staying within the boundaries of our channel type shape here for the most part as well. Once again, some bearish divergence on the RSI, just that I like to point out as an example here, kind of a contrarian example almost, to show that just because RSI is going the other way from price doesn't mean it's going to play out toward the bearish direction. We've had 3 examples of that not happening here. So RSI is very nuanced. It can be quite tricky for new traders here. So just some food for thought for everyone here. But our 21-day EMA comes in right here near about 213, fairly close to our trend line near about 210. So those would be some downside points to consider on the way back to 207. That's the most important one that stands out the most based on how many times price touched that level here. When we do look at our standard deviation channels, +2 channel comes in near 224. That's about where we topped out a few days ago. And our +1 channel lines up closely once again with the studies that I just mentioned, our 21-day EMA and our trend line there near about 211.
All right, so Dan, knowing that we're only about 1% off of all-time highs right now, how would you position this trade?
Yeah, so today's trade example, as I mentioned, because of the earnings announcement coming up and the fact that we are trading at these levels, is defined risk really was the theme today in this trade example. So I'm looking at the December 220, 240, 260 call fly. So buying 1 220 call, selling 2 240 calls, and buying 1 260 call. You can do that for about $3. So there's your risk on this trade, a $3 risk zone to the downside if we see some weakness. But if we have some further upside, there's a nice capture zone that takes you almost all the way up to 257. So again, a big zone to the upside with defined risk to the downside. So it's kind of playing for further a price appreciation post earnings, but if we do get a disappointment, then there's defined risk to the downside.
All right. Well, we appreciate you being with us today, Dan, for the Big Three. That's Dan Deming from KKM Financial, and of course, Rick Ducat, our lead market technician here on Schwab Network, as always.